We'll be talking about a number of things. This is the agenda. Talk about reminders and what's new, information returns in general. We'll take a walk through Form 1099 miscellaneous. We'll look at correcting errors. We'll look at the Social Security number, tax ID number, employer identification number, and that solicitation process and what happens if there's a problem with them, and if you get notices to send out B notices to the vendors. We'll talk about verifying the tax ID numbers so that you avoid some of those notices, and then back up withholding and penalties and some other problems and deal with your questions. Now, what's new is that for 2020 reporting, there is a resurrected form. There used to be this form many years ago. It's a 1099 non-employee compensation, 1099 NEC. And it will replace Box 7 on the 1099 miscellaneous. So this is only for reporting non-employee compensation. The reason that they're coming out with this is that the due date for the 1099 miscellaneous reporting with Box 7 entry for non-employee compensation has an accelerated due date. We'll talk about that more as we go along. But anyway, it is causing some problems with later due dates for 1099 miscellaneous that do not have non-employee compensation on them. So they're going with a separate form, and that should remove the due date confusion and it just make life easier for everybody. So that's there. And with that, there were some significant revisions to the 1099 miscellaneous for 2020. Some boxes have been moved around, and I will probably mention those a little bit later, indicating which boxes were moved. But you can see Box 7 is what used to be Box 9 now, and there's some title changes and some other things. One thing I will mention is that the 2020 instructions for Form 1099 miscellaneous seem to be a bit more detailed and comprehensive as to what needs to be reported and how to report it. Okay, there's also online fillable forms that you can use. This began with 2018 forms. It's only, well, you can fill the forms out, but only the copies 1B, 2C, and D, not copy A, because it still has the special red ink on it, and that's required for the machine reading at the IRS. So if you're filing on paper, you can print these, fill them out online, print them out, and save your hard copies. Use these hard copies for your recipients in the states and for your own records. And but you still need to have the official form for the copy A. There are several forms, including Form 1099 miscellaneous, to which this applies. The backup withholding rate changed starting in 2018 also. Previously, it was 28%. It is currently 24%. And the 30% non-resident alien standard withholding rate for people that are not working in the U.S. as employees is 30% for whatever income. There is another rate for certain partners as the maximum rate of 37%. Those rates did not change. There has been some adjustment to where the paper forms are filed, so there's some new addresses for 2019, and I don't recall I don't think anything changed for 2020, but I just got a copy of the new instructions, and I haven't seen the general instructions yet, so I don't know if there are further changes, but be sure to check your filing mailing addresses to make sure that you're filing to the right area for your right service center for your location for your state. For 2019, there were a couple of new forms, Form 1099-LS and Form 1099-SB, and then also Form 1098. Most of these accounts payable will not be involved in these. The two other forms are for the first two forms. The LS is 1099-LS is for the acquirer of a life insurance policy by purchase from the owner who is not does not have a substantial relationship to that person who is insured. And then the SB is the seller's 1099 information from the life insurance company. The 1098F is for fines, penalties, and other amounts. This is filed by governmental entities and certain other non-governmental entities, but it's used to distinguish non-deductible fines and penalties from other amounts such as restitution payments, which may be deductible by the payer as a business expense, whereas the fines and penalties generally cannot. So those things can be separated out. The filing due date for the 1099 miscellaneous that is reporting non-employee compensation in Box 7 needs to be filed by January 31st to be on time. We're already past that date. We're not quite to the end of February, or not quite within the 30 days for getting the correction done before the penalty increases. So if you have some of those, you may want to make sure you get them filed on time. We'll talk about what goes on with that, or get them filed before the end of February if you have any that haven't been filed but need to be. Now, otherwise, the forms are due on paper by February 28th or e-filed by March 31st. And the due date to the payees remains the same, January 31st, or if you get an extension, the extension for the 1099 miscellaneous with Box 7 is no longer automatic, but for other purposes it would be. So we'll be covering some instructions, special instructions on how to handle the forms that have 1099 miscellaneous and those that do not. Next year, that should not be a problem. The due date for the 1099 NEC is going to be January 31st for filing and also for furnishing to the recipient. But the 1098 will no longer have that split due date for Box 7 versus for non-employee compensation versus anything else. Truncating Social Security numbers, you can do this on 1099s. The forms that it's allowed on from Treasury Decision 9675, which is from 2014, are listed under that first bullet point. You can replace the first 5 digits of the Social Security number or the employer identification number or the ITIN with asterisks or X's. There's also some other forms that have been issued since then that are not on that list in the Treasury decision. If the truncation is allowed, it will indicate that in the specific instructions for the form. Now, the truncation is only allowed on copy B and other copies furnished to the payee. You cannot truncate the numbers on forms filed with the IRS or state or local governments, or unless otherwise authorized in the special instructions. Notably, W-2 is one of the forms that is not, the truncation is not authorized for. So, and that applies to any of the ID numbers that are listed there, the Social Security number, individual taxpayer identification number, adoption taxpayer identification number, and the employer identification number. Okay, what are information returns? These are tax documents that are filed by businesses to report certain business transactions. And the general instructions guide was not out when I did this. That's why I didn't have an update on the mailing addresses if there was one. But the general instructions are not out for 2020 yet. But it's on pages 25 to 29 of the 2019 of the general instructions for all of the information returns. And it consists of 2 parts. I assume that they will have a similar chart in the new one. And the first part of the guide is a listing by form number. And I've got mortgage interest highlighted there, the 1098. And it tells what to report, the amount to report, $600 or more, when it's due if it's filed on paper, when it's due to the IRS, and when it's due to the payee or the payor in the case of the 1098. That would be January 31st, but on paper February 28th. And then there's an asterisk on there that tells you there's March 31st if it's filed electronically. The second part of the form is an alphabetical listing of payments, types of payments, and some other things also. And I highlighted a few of those in the second column. Again, the mortgage interest statement to show that it's on there. And it tells you what form number the form number is, so you can look on the other chart to see what's required. Moving expenses go where they're reimbursed or paid by the employer are now fully are not excludable from employee income anymore, and they're going to be reported as wages on the W-2. Non-employee compensation, it says 1099 miscellaneous for 2020. That'll be the 1099 NEC. And the other one I wanted to show was non-qualified deferred compensation. If it's paid to a beneficiary, it goes on a 1099-R. If it's paid to an employee, it goes on a W-2. And if it's non-employee, it goes on a 1099 miscellaneous. Now, certain non-qualified deferred compensation payments of $600 or more are going to go on the 1099 miscellaneous and may also be shown on, I've got a note on there a little later on that with the change in the form for 2020. There will be reported in box, it'll be reported somewhere else as well. Okay, who must report for 1099 miscellaneous? Any person, and person is an inclusive term that refers to natural persons and also entities. So this would include a corporation, a partnership, or an LLC limited liability company, an individual, an estate, a trust, if they're filing these forms, and certain nonprofit organizations and federal agencies and governmental entities. So the organizations that are engaged in a trade or business, they have a reportable transaction. For rental property, it's going to be where the owners are considered to be engaged in a trade or business rather than simply an inactive passive activity or actively involved in a passive activity, renting property. So a number of rental property, there was a provision in the Affordable Care Act that required rental property operators, whether they were engaged in trade or business or not, to file 1099s, and that was repealed. So that is not true unless the owner is considered to be a real estate professional engaged in trade or business of renting property. Also, nominees, middlemen, successors, qualified settlement funds, and so on. These are intermediaries. They're collecting the money and then paying it out to somebody else who is the ultimate person who is going to end up paying taxes on it. Now, for 1099 forms in general, or any information return in general, one of the things that you want to do is check the specific instructions to see who is in fact responsible. And there may be several people who could be responsible, and possibly even a hierarchy as to how that goes. And the one that comes to mind is a 1099-S for the sale of real estate, where it might be the bank, or it might be the title company, or it might be the closing attorney, or but somebody has got to issue that form, and so the responsibility falls to an appropriate person, probably by agreement of the parties that are potentially responsible. Reportable payments for 1099 miscellaneous. Generally, any payments made to a non-corporate entity or non-corporate business for entity for services, and that includes the individuals and sole proprietors. A limited liability company is usually treated as either a partnership or sole proprietorship, so those would be reportable entities. A limited liability company is not incorporated, even though the application for the state is usually through the Corporation and Securities Bureaus, and people often think that they are a corporation if they formed an LLC, but they're not treated as a corporation unless they elect to be treated as either a C corporation or a subchapter S corporation. So, and there are a couple of other exceptions to that, where that might come into play, but generally that's the rule. For disregarded entities, you're going to use the owner's taxpayer identification number, and of course, as the reporting entity, it's whatever kind of entity that its single member owner is. So if it's an individual, you would use that person's social security number, or if it's a sole proprietor, it might be they have an employer identification number, and that would be the sole proprietor's identification number, not the LLC's identification number and name that's getting the 1099. If it's a corporation, you're going to use the corporate name, the owner of the corporation that owns the LLC. You're going to use that name. If it's a partnership, you're going to use the partnership's name and ID number, so on. Payments made for tangible personal property do not have to be reported. There are some other exceptions and minimum filing requirements that we'll go over as we go. Some payments for 1099 miscellaneous also have to be reported to corporations. So the exemption for corporations is not absolute. So any of the following payments made to corporations generally must be reported on Form 1099 miscellaneous to that corporation, as well as to non-corporate entities. This includes medical and healthcare payments that are reported in Box 6, fish purchases for cash reported in Box 7, attorney's fees reported in Box 7. Now, the Box 7 here is referring to non-employee compensation in each case. So just keep that in mind, that those items will be flowing back over to the 1099 NEC for 2020. Gross proceeds paid to an attorney are reported in Box 14. I'll talk about this a little bit more later in the distinction between that and the fees. Substitute payments in lieu of dividends or tax-exempt interest reported in Box 8. And payments by a federal executive agency for services to vendors reported in Box 7, and that includes parts and materials for those services, related to those services. Okay, let's walk through the 1099 miscellaneous box by box, and the rents are reported in Box 7 of $600 or more. Rental real estate, rental of equipment, rental of farmland. What can come up is storage units, because there is an exception that's discussed in the instructions for things like merchandise, storage, freight, telephone, wire, telegraph, similar kinds of things. And I would be careful with that on the storage. That question came up. And if my reading of the regulation suggests to me that when they're talking about storage, they're talking about the temporary storage of goods in transit in a warehouse, where you're not renting the warehouse space, you're paying somebody to store your goods for you temporarily. And but with a storage unit, you're actually renting that real estate or that space, and or that locker, and that seems to be real estate. And I would suggest to you, even though some other practitioners disagree because it says storage, I would suggest to you that it would be safer to just go ahead and file a 1099 miscellaneous for that storage unit rental, and avoid possible problems down the road. It's toss up, but it doesn't matter, because whoever is receiving that, if they're a non-corporate entity, they should be reporting the income anyway, so it shouldn't make any difference if they get a 1099 or not. Royalties in Box 2 of $10 or more. Generally, this is copyrights and patents, that sort of thing, but oil and gas type royalties can be reported on there. However, they're generally coming through a pass-through entity of some sort, and in most cases in my practice, I've seen them on K1s rather than on 1099 miscellaneous. Other payments, Box 3 of $600 or more. This includes a number of things, such as prizes and awards, not prizes and awards to employees, but prizes and awards to non-employees. And in some cases, a prize and award from a vendor to employees is considered to be issued or to be paid by the business itself, or paid on behalf of the business by the vendor, and so it still would be wages rather than showing up at a 1099 miscellaneous. Other things would be wages in respect of a decedent. This is kind of a special case where the wages had not been constructively received by the decedent prior to being paid, and they're paid to a beneficiary, a personal representative, or the estate. And in that case, the beneficiary, the personal representative, or the estate is going to be responsible for the taxes, or serving as a nominee and issuing 1099s to the beneficiaries who get the money and who have to pay the tax on it. That's just for the income tax wages. They go on 1099 miscellaneous in box 3. The Social Security, Medicare wages and taxes are going to be reported on a W-2, even if paid and after the date of death, unless it's in a year subsequent to the year after the date of death, or subsequent to the year of the date of death, in which case it's not subject to Social Security and Medicare taxes and no W-2 would be issued, but a 1099 miscellaneous with a box 3 entry would still be issued to the recipient for income tax purposes. There are some other items that go in there, and there's a pretty comprehensive list on in the instructions on that. It's just things that don't fit into any other of the boxes that are reportable types of income. Federal income tax withheld of any amount. So if you did backup withholding right away, you need to, if you did backup withholding before getting a tax ID number or indication that it was, they didn't provide you with the information you needed, so you backup withheld. According to the rules, you deposited the money. Even if you didn't deposit the money, that withholding stands because it was not withheld in error, and you're going to issue a 1099 for that, showing the withholding in box 4. And regardless of the amount, you're going to show the income that was associated with that backup withholding. So it could be the income is less than $600, but it's still going to be reported because of the backup withholding. Fishing boat proceeds in box 5 of $100 or more. This is for cash purchase of fish of $600. Well, the fishing boat proceeds of $100 or more is the crew sharing type thing. That goes in box 5. That's where the crew either gets a monetary share of the catch or the sale of the catch, or might even get an in-kind share of the catch. If it's $100 or more, it goes in that box 5. Cash purchases for fish of $600 or more are going to be reported in box 7. And that's where a restaurant, say, is buying directly from the fishing operation or the fisherman, buying the catch from them. Medical and health care, payments for medical and health care, these are also reportable to corporations. Payments of $600 or more to healthcare providers for medical or healthcare services. This does not include payments to insurance companies for premiums on insurance, healthcare insurance. You're going to list the payee as the recipient. If you paid the corporation, that's who's going to get a 1099. If you paid the individual doctor, that's who's going to get the 1099. If you paid both, then you're going to issue 2 1099s, one to each. It may include charges for injections, drugs, dentures, and other similar items. Certain items are not generally included in that. Payments to pharmacies for prescriptions, payments to tax-exempt hospitals and government facilities, and payments made under a flexible spending arrangement or an employer-provided HSA or MSA, health savings account or something like that, are not generally reportable payments. So if it's under the flexible spending arrangement, it's usually going through the employee rather than directly to the provider, or it might be being paid directly to the provider, but it still doesn't need to be reported. Non-employee compensation. For 2019, it gets reported in Box 7 of 1099 miscellaneous. Payments of $600 or more, generally subject to self-employment tax, and this is for services by a generally an unincorporated service provider. However, again, certain service providers such as attorneys are going to be getting a 1099 miscellaneous for this Box 7. For 2020 payments, they're going to be reported on the Form 1099 NEC instead of on the Form 1099 miscellaneous. Substitute payments in lieu of interest or dividends reported in Box 8 of $10 or more. Direct sales of $5,000 or more, and this is not a dollar amount, it's simply a checkbox, and we'll look at that in a moment. That goes in Box 9 for 2019, but for 2020, it's going to be Box 7 instead of Box 9. They shuffled the boxes around. So Box 7 has a new reporting item in it for 2020. It's not the NEC anymore. It's that direct sales checkbox. Crop insurance proceeds in Box 10 for 2019 at $600 or more. For 2020, it gets reported on Form 1099 miscellaneous in Box 9. Box 11 is not in use for either 2019 or 2020. Box 12 is brought back in for use in 2019, and this is going to be for reporting the Section 409A deferrals, which previously were reported in Box 15A, I believe. We'll see that in a moment. Excess golden parachute payments are still in Box 13. That's any amount. Gross proceeds paid to an attorney of $600 or more is in Box 14. Box 14 is being reassigned for 2020, so it's Box 10 for 2020 that is going to have that gross proceeds paid to the attorney. Fees that you pay to the attorney for services to your company, legal services to your company, go in Box 7 of Form 1099 miscellaneous as non-employee compensation, even if it's a corporation. For 2020, it's going to go on the Form 1099 NEC. This is different for the doctors and dentists and stuff because they have their own Box 6 and they're still being reported on the miscellaneous. The gross proceeds paid to the attorney are generally settlement, money for settlements, and even if you're paying for the plaintiff's fees, it will go in that Box 14 or Box 10 for 2020. So it's not necessarily just legal fees that go in that Box 7, it's not just the legal fees that are the exception to the Box 14, but and it's the amount paid to the attorney. I'll talk about that just a little bit more. I have an example. Box 15A was the 409A deferrals. It's been moved to Box 12 for 2020, $600 or more. Section 409A income, Box 15B of any amount, and that appears to be what is now called for 2020 non-qualified deferred compensation, which is reported in Box 14. And for this, anything reported in Box 14 as non-qualified deferred compensation, it should also be included in Box 1 of Form 1099 NEC, because that's going to be probably subject to self-employment tax. So it gets reported on two forms for that. State information has for 2019 goes in boxes 16 through 18, and for 2020 it'll be boxes 15 through 17. So they eliminated box 18. Here's the 2019 form. I'm going to point out a couple of things on this. Up at the top, there are two check boxes, one for void and one for corrected. And these are for making corrections. The void box is used if you're making a correction to a paper form, and there's a way to void it in an electronic file also if you don't just simply delete it and put in a new file. The void box, if you check that, that means that particular form will not be processed when it's sent in with a transmittal. Now, why would you send it in with a transmittal? Because quite often there are 2 or 3 forms to a page for the paper forms. And if you have a mistake on one and you don't want that one to be processed, you check the void box, and then if you need to replace it with a correct form, you fill out a new form on a new page or on an existing page. So that void box just simply keeps it from being processed. So the void box is only used prior to filing the forms with the IRS if you make a correction there. The corrected box is for making corrections to forms that have been previously filed. And we'll talk about how to use that corrected box. Just keep that in mind, that when you're making a correction, you generally are going to check that corrected box. And there are times when you will not check the corrected box when making a correction. We'll talk about that in a minute. I'd like to point out box 9, which will be box 7 next year. That's just simply a check box, not the dollar amount. That's for sales of consumer products to an individual or a business for resale. And if it's 5,000 or more, that indicates that more than likely the person is in the business of reselling that stuff rather than consuming it themselves. So this would be things like Mary Kay and Shackley and stuff like that. And it doesn't necessarily have to be a multi-level marketing thing either, because I've seen some instances where a particular purchaser was buying audio equipment, speakers and sound systems and amplifiers and control boxes and things of that sort, control boards, and putting systems together and reselling those. So selling those directly to that person, and then they're reselling them, they would get a 1099 with that box check. And in the cases where I've seen it, that's the only box checked on it's the only box where there's an entry on the form. 2 other check boxes on the form down on the other side of that center line, up above box 15B on the 2019 form, is the FATCA filing requirement form. And this generally is if you're a foreign financial institution or you're a withholding agent for a foreign financial institution, or you have transactions involving a foreign financial institution or going through a foreign financial institution, you're going to check that box. If nothing's involved with that, then you don't check it. And again, there are extensive instructions for how that box is to be used in the instructions for the 1099 miscellaneous. The second TIN notice is if you've received 2 TIN notifications for different in different years, 2 notices within a 3-year period for the same account, you check that box, and that means that you've gotten the 2100 or CP 2100 or CP 2100A and sent out your B notices, and that constitutes doing your due diligence. And because you've gotten those 2 notices, the IRS has told you there's a problem with the account. You know there's a problem with the account. You've done what you were supposed to do, and they won't bother you anymore about that one. So that's what that's for. So moving along, the state withholding and all that information. Some of the states actually do require withholding. North Carolina, for any non-resident service providers, say a plumber coming in to work on a housing development from South Carolina going into North Carolina, North Carolina wants North Carolina tax withheld on any payments to that plumber, and then you file the information with North Carolina, filing the 1099s with withholding on them, along with the W-2s that you might be issuing also. So in some cases that happens. Here's the 2020 form. You see it still has the void and corrected boxes up there in the FATCA reporting and second TIN notice box. Some of the boxes have been moved around and rearranged. So if you have software that prints this stuff out for you, if you're doing it on paper, it's going to have to be revised, and also your service providers, if you're going through a service provider to get these printed or get the recipient copies printed, there's going to be some revision to the software that prints that. The boxes aren't in the same place. This is the 1096 for 2019. Just a couple of comments on this. The top half is pretty much identifying information and contact information for the issuer. There are some boxes, numbered boxes, 1, 2, 3, 4, and 5, and then 6 and 7. Box 1 and box 2 are for for ID numbers. Box 1 would be the employer identification number of the issuer. Box 2 would be used if the issuer does not have an employer ID number or is issuing the forms under their Social Security number. Box 3 is the total number of forms attached, and that is not the number of pages, because remember, there might be 2 or 3 forms to a page. So that would be the number of forms actually included in the transmission. Federal income tax withheld, that would be the box 4 amounts added up in the case of 1099 miscellaneous. Box 5 is the total amount reported on these forms. This is for reconciliation purposes, and what goes in that box is indicated on the back of the 1096 for the instructions, and we'll look at that in just a second. Box 6 is to enter an X and only one box below. That's because for each 1096 you mail in with paper forms included in the transmission, you are going to send only one type of information return with that 1096. In other words, if you've got both 1099 miscellaneous and some 1099 divs, you have 2 separate transmissions there. Now, also, what can happen, and we'll talk about this a little more, you may have 2 or more transmissions of 1099 miscellaneous. Actually, electronic filing is probably a best practice, and I'm just mentioning that because we'll talk about that a little more. The box 5, the total amount reported, that's on the back here. Bottom of the left side column, it says no entries required for certain forms. And then for all the other forms, it lists the boxes that contain the information, the dollar information that gets added up to be reported in there. And if we look at, some of them only have one, like the 1099R only has one box, but the 1099 miscellaneous, you're going to report the amounts for 2019, the amounts in boxes 1, 2, 3, 5, 6, 7, 8, 10, 13, and 14, and add up the amounts in each of those boxes and reported as a total amount in that box 7 on the front of the 1096. For 2020, oh, I'm sorry, there's one more thing I wanted to mention on the, whoops, let me get back down there. That box 7 on the front, it says Form 1099 miscellaneous with NEC in box 7. Check the box, and if you've got any Forms 1099 miscellaneous with a box 7 entry in that transmission, you need to check that box, and we'll talk about what happens after that in a moment. That box is eliminated for 2020 because you now have an additional form, the 1099 NEC. Otherwise, everything else is pretty much the same, and there'll be an adjustment to what's reported. The NEC will be listed on there. The amount reported in box 1 on the NEC is going to be included in there, and box 7 is no longer included on the list for 1099 miscellaneous. Okay, attorneys. For attorneys, you report payments for legal services to your company in box 7, NEC, and for 2020, it's going to be on Form 1099 NEC. Report the gross proceeds paid to the attorney in box 14. That's the amount paid to the attorney, not necessarily the gross amount of the settlement. And that's done in box 10 for 2020. Now, you may be paying the attorney for services in a settlement situation where they're not services to your company per se for legal services, but they're handling the settlement and you're giving them money to cover the settlement and so on. And it may be your attorney, but that's not a box 7 item. That's still a settlement item when that happens. So you might be giving money to your attorney to use for making the settlement rather than paying the plaintiff's attorney. And that still goes in box 14. Report the appropriate amount separately to the recipient. So you may be issuing 2 information returns, and we'll look at an example right there. Now, the reporting requirements to attorneys for either type of payment includes payments to corporations. So we have an example here of a legal settlement that results in a back pay award of $300,000 for an employee. Might be a former employee, but for this purpose, because they're being paid back pay wages, it goes on a W-2. So for tax purposes, that person is considered an employee that year, even though they're not actively employed. The employer withholds $100,000 for taxes. That includes the Social Security, Medicare, and state income tax, and federal income tax, and whatever. And then the remaining $200,000 is paid to the attorney. The attorney retains $60,000 for the attorney's fees, and the remaining $140,000 is paid to the employee or former employee by the attorney. The company reports on Form 1099 miscellaneous $200,000 in box 14 to the attorney. On 1099 miscellaneous for 2020, it'll be box 10. It also issues a W-2 to the employee showing $300,000 in wages and $100,000 withheld for taxes. Certain other payments do not have to be reported on a 1099 miscellaneous. Certain other types of reportable payments. These are payments under the 6050W from the Housing and Economic Recovery Act of 2008. And what this says is that it requires the reporting of the gross amount of card payments processed for each payee by the merchant acquiring entity, and that would be the bank or whoever issued the card or the card processing machine to the vendor, to the business. This is for card payments, payment card transactions, credit cards, and debit cards. Not generally store cards where they're handling that themselves. This is going to be a third-party intermediary collecting the money and putting it into the merchant's account. Also, third-party settlement organizations such as PayPal and Square are required to report transactions as well. And they put a threshold on this, $20,000 in a dollar amount of transactions or 200 transactions. Then the IRS wants a 1099-K issued to that person because it's presumed they're in business, and they'll be looking for a tax return, business tax return for them. Now, it's not just PayPal and Square. It's also eBay, Uber, TaskRabbit, Airbnb, and all of these things in the gig economy or the new electronic economy and so on, where people, these platforms are serving as an intermediary between the provider of the services or the rental or whatever and the consumer. So there is also involved in this a mandate for regulations to prevent reporting transactions more than once. So payments made by card or third-party network transactions do not have to be reported on a 1099 miscellaneous. If you're not sure, you can go ahead and do it. Report it on 1099 miscellaneous. They're going to have to do a lot of sorting out anyway, because if you look at certain types of places that take card payments, I do my banking at the grocery store and the pharmacy, and I get cash back from them. That cash back is not income to them or revenue. It is an exchange thing. They sort that out, but that cash back payment is part of the gross payments to them, and it's included in the 1099K. Similarly, restaurants, the tips to the restaurant employees are included in the card payment often, and those are not taxable to the restaurant. They belong to the employees, and they're included in the 1099K, but the restaurant reconciles those as tips paid out to the employees. This does create a gap, though. So if you're paying through PayPal or one of these other things, there's a difference between what's reported on the 1099 as non-employee compensation, $600, and the $20,000 that's required for the settlement organization to report on a 1099K. And apparently they figured it was not worth the trouble to haul all kinds of people into that information return reporting for the 1099K, such as people that are using PayPal, for example, just to transfer cash in the family, or lend money to a friend or something like that. This is a picture of the 1099K, and you as accounts payable don't have to issue those. This is relief for you. You pay by card, pay the plumber by card that comes in and repairs the toilet in the office, as an independent contractor or partnership, and you pay them by card. The bank is going to issue them a 1099K, and you do not have to issue a 1099 miscellaneous to them. When to file and deliver. Generally, the recipient copies are due by January 31st. There are some other dates for certain forms. For example, 1099 miscellaneous with a box 8 entry or box 14 entry is February 15th. And that's because sometimes what goes into box 8 or box 14 is dependent on an information return from somebody else that's due to the recipient by January 31st. And the broker's statements come to mind with that, where they're constantly getting, they're handling investments for their clients, and so the broker is making investments, and then the broker gets 1099s from the company that it was invested in, and they don't have all of the correct information to deliver ahead of time by January 31st. They're due to the IRS if they have 1099 miscellaneous with box 7 NEC by January 31st for both paper e-filed returns. That's for 2019. Paper forms are due by February 28th to the IRS if they do not have NEC on them, and the electronic forms by March 31st if they don't have NEC on them. Watch out for 2020. There's a leap year caution here on the February 28th due date. And watch out, because if you've got forms due the state, they might be due on a different date. And the instructions, the draft instructions, when I typed this up, and I didn't correct it, I didn't look, but it said February 28th on the federal instructions too, because they're just carrying it over from the previous year. Extensions may be requested for filing. Form 8809 is used to do that. You can file that through the fire system as well as the forms, but you can get an automatic 30-day extension for most forms, but not for W-2s and not for Form 1099 miscellaneous with non-employee compensation reported, and in 2020, not for the 1099 NEC. We'll look at the 8809 in a moment. If you had an automatic extension with a hardship, you can get an additional 30-day extension in many cases. I'm going to skip this one. That's something we already talked about. Now, for any forms 1099 miscellaneous reporting non-employee compensation filed after January 31st, this is the filing with the IRS. You want to file those in a separate transmission from any other Forms 1099 miscellaneous that do not have non-employee compensation, because those are due later. If you don't file them separately, the IRS is going to treat every form in that single transmission as if it was subject to the Section 6721 penalty for failure to file by January 31st, whether it's filed on paper or in a single with a single Form 1096 or filed electronically through the fire system. And the employer may send the filer, in that case, a Notice 972 CG penalty notice, and the filer can respond and clarify the content of the submission. That gives you an opportunity to do that. And the IRS, you have to indicate which forms did not report NEC, and they'll correct the proposed penalty on that basis. But you don't want to go through that hassle, so make separate transmissions for those. And I would probably even do separate transmissions if you're doing any mixture of them on January 31st. I would do them in separate transmissions anyway, just to keep it clean. This is the 8809. I think I blew it up a little bit. Yes. The bottom part, box 5, is check this box only if you already requested an extension and now need an additional extension. And then also, then you go down and see the instructions, and it sends you down to box 7. For forms W-2 and 1099 miscellaneous with non-employee compensation, you have to have a hardship or meet one of these conditions that's listed there in order to file for an extension, and the IRS generally is pretty stingy with granting those extensions to file or furnish the forms. So major catastrophic event in a federally declared disaster area, fire casualty or national disaster that affected the operation of the filer, death, serious illness, that kind of stuff. Also, interestingly, the filer was in the first year of establishment, in which case they're probably eligible for a first-time penalty abatement anyway, so that would happen, or they might have just made a mistake and not realized they had to file by January 31st. So there are a number of things there. Electronic filing, as I said, that's a best practice. For 2019, 250 or more forms. There was a proposal that was a proposed regulation that was to go into effect at the beginning of 2019, where it was 250 or more forms of all forms, including Form W-2. That was never finalized, so it didn't go into effect. So the requirement is separate for each type of return filed. So you might have 270 1099 miscellaneous and 10 DIVs. You can file the 10 DIVs on paper, but the 1099 miscellaneous has to be electronically filed. And the requirement is separate for corrections. So if you have to correct fewer than 250 forms 1099 miscellaneous, you can do the corrections on paper. Now, for 2020 forms filed in 2021, that number is being reduced to 100 forms. So if you're filing 110 forms and saying I can still file on paper for 2019, for 2020 you will have to file electronically or be out of compliance. The fire system filing information returns electronically does require software to produce the file format. It is a flat file. If you understand what that means, it's just you can open it up and look at it and see that everything's in there. But however, it's put together in a way that it's a little bit hard to read because a lot of things have zeros or other characters in them that are not information. But it requires software to produce the file format of some kind, and for the specifications, you can look at IRS Publication 1220. I believe I may have put that in your handout package. I'm not sure. Any filer may participate. I do it for my clients, and it's usually 3 or 5 or 1 1099 that needs to be issued for my clients when they have a need to do it. and I file them electronically, and I use my tax software to produce the file format, or my accounting software produces a file format for it. There is an application approval if you want to have your own transmitter control code. My clients do not need one because I have one, and I can file on their behalf if I'm authorized to do that. So if you want to have your own transmitter control code, you need to apply for that at least 45 days prior to the filing date, or you may be late. You can create an account before that. Certain information is required, and then you are set up to do the filing. And as I said, you can have a third party file it for you. My clients have me do it for them, and I have my own TCC. 1 year I went through another third party to file the forms, and there were issues with some data breach and a third party that was servicing the third party I was using. And so all of us got involved in announcing that data breach all the way down the line to everybody that had gotten a 1099 from us, either as an issuer or a recipient. Corrections. There's safe harbor de minimis rules. Information with certain incorrect dollar amounts may fall under this, and it is a single dollar variance of not more than $100, or a single dollar variance for withheld tax of not more than $25. And if the safe harbor applies, the payer will not have to correct the information return, and the information return is treated as filed with all the correct information, required information. The reason this came about was because when they accelerated the due date for the W-2s and the non-employee compensation 1099s, there was a concern that there would be a lot more minor errors that occur, or a lot more errors that occur just because of the not being able to have that 1 or 2 month period to go back and look, or have the recipient get it and say, hey, there's a mistake on this, and that kind of thing. So they said, okay, if it's a small amount, we'll treat it as de minimis, and you don't have to fix it. However, if the payee elects to have it fixed, you have to fix it. And I'm going to recommend to you that you may want to voluntarily head those off by fixing them when you find them, and just going ahead and fixing them, because there's all kinds of other stuff that happens after that. This rule is about relief for the issuer, and a penalty relief for the issuer, avoiding penalties on these small dollar amount items. And if you start playing around with requiring the payee to elect to have a new form, a corrected return prepared, you get all kinds of additional burden going on. There's a notice 2017-9 that has the information about that and what's required in the notification if you elect to set up your own notification system. Otherwise, you have to post general notification information related to it, so that all employees know, or all of the vendors know about it. And if you use the notification system specified in the IRS notice, then you don't have to make a special notification to them to tell them what your notification system is. So if you do that, you've got all kinds of stuff you have to do. Well, anyway, if you get notified that the payee wants you to correct the information return, you have to furnish a corrected payee statement and file a corrected information return within 30 days of that request. The error is treated as due to reasonable cause, because the safe harbor doesn't apply if they ask for a corrected return, but it's treated as due to reasonable cause, and there's no penalty. There was a proposed regulation that had all kinds of other considerations involved, and you could just see this thing becoming a real major mess in that. You're not prohibited from correcting errors where the payee does not make the election, and you're encouraged to do that. The safe harbor is about penalty relief. It talks about if you set up your own method here, what are the restrictions on that? And The safe harbor applies only to inadvertent errors in money amounts on returns that were filed or furnished. It does not apply to intentionally misreported amounts, failure to file returns or furnish statements, even if the dollar amounts meet the requirements. Now, here's the kicker. If you elect to not correct it, if it falls within the safe harbor and somebody asks for you to correct it, you're required to keep records of their election to have it corrected, and if they revoke the election. And the question is whether the election applies to prior and subsequent incorrect information returns, or all information returns for that particular payee, or whatever. But it just becomes a major task to keep track of all of that stuff. And I don't see employers wanting to do that. I see it being much better to just go ahead and voluntarily fix things when you find out about them. Okay, different types of corrections. There are two types of corrections, type 1 corrections and type 2 corrections. And coincidentally, type 1 corrections involve one information return being required to make the correction, and type 2 corrections require two information returns to make the correction. Type 1 error is an incorrect money amount, code, or checkbox on the originally filed return, or return was filed when one should not have been. What you do is you prepare a new information return. You enter an X in the corrected box. Remember I mentioned that? And I would put the date at the top of it, because sometimes corrections will lead to more corrections, and you want to know which one is the last one, and so does the recipient, and so does the IRS. And you can enter that at the top of the form. You correct any recipient information, such as money amounts, that was incorrect, and report other information as on the original return. You prepare a new transmittal form 1096. If you're filing on paper, you provide all the requested information just as you would an original filing. File it with a copy A of the return with the appropriate service center, and you can attach other copies of the same type of return to that. And do not include a copy of the original return that was filed incorrectly. It will be processed again, and you'll end up right back where you started. Type 2 corrections are things where there was no payee tax ID number, that's the Social Security number, employer ID number, and so on, or it was incorrect, or the name was incorrect, or an original return was filed using the wrong type of return. Oh, by the way, if a return was filed and it should not have been, on the type 1 error, you simply enter all the correct information for the recipient and the issuer, and you enter 0 in all the money boxes so that it completely cancels out that form that should not have been filed. Okay, and you check the corrected box up there. Okay, with the type 2 errors, you've got to have two, because you've got one that has incorrect identification information on it, and you need to cancel that one. And then you need to issue another one that has the correct identification information on it, as well as the correct reporting information. So you identify the incorrect return and prepare a new information return and put an X in the corrected box for that one and a date at the top. And then you enter the payer, recipient, and account number information exactly as it appeared on the original return that was incorrect. Because if you do not, it won't be able to find the incorrect one and cancel it. And you enter 0 for all money amounts for that return. Then you prepare a second information return, and this is, in fact, a new original. It is not a corrected return. It is a new original. You prepare it with all of the information, all of the correct information, including the money amounts and the payer and payee ID and all that stuff. And do not put an X in the corrected box, because you're not correcting anything from that. You canceled the original one, and you're writing a new original here. And you include all the correct information on the form, including the correct tax ID number and name. You prepare a new transmittal form 1096, enter one of the following phrases at the bottom. File to correct TIN, file to correct name, file to correct return. Now, if you have the wrong type of return, you probably need two 1096s to correct it. So you need one to, if you issued an INT instead of a DIV, you need one to cancel that INT, and you file a 1096 with that INT to cancel it. And then you also file a 1096 with the DIV that's replacing it. You provide all of the requested information on the 1096 as you ordinarily would and file it with the correct service center. And again, do not send in copies of the original incorrect returns. If you need to correct a payer name or tax ID number, you have to do that by letter, and it's a little more process. Let's talk about, I'm going to run over a little because we started late, and I apologize for that, but we'll figure that out a little bit later. But I want to want to cover this material. We're looking at where you get the information for this. Now, you can get the tax ID information and name from just about anywhere. But a best practice is to ask for and get a W-9 because it provides other information that you might want to know about the entity other than their name and ID number. So for a U.S. person, including entities, you want a Form W-9. For non-resident persons and entities, you need a form in the W-8 series. There is no Form W-8. It's a W-8BN, W-8ECI, things like that. We'll talk about which tax ID number to use. There's two publications that are included in the handout. Verification publication 2108A and reasonable cost publication 1586. And they've got a lot more detailed information than what I'm going to cover here. And I'm going to skip over these slides because I did provide you with the handouts. And I do want you to take a look at those if you run into these situations because they're very helpful. Okay, the taxpayer ID number, you need to solicit that. Make an initial solicitation. That's required for due diligence. The information returns must include the correct name and tax ID number. The tax ID number is compared to at the IRS to the Social Security Administration's numbers list, which might be a little bit out of date, and the IRS employer identification number and individual tax ID numbers list. The name control is only 4 characters, and I'll show you which 4 characters briefly. But somebody asked the question, okay, if the name says Inc. or Incorporated, and we did the verification and it came back as correct, doesn't that show that they're a corporation? And the answer to that is no, because it doesn't check that far into the name. It's only the first 4 characters of the name that it's looking at. And so it's not verifying that it is, in fact, a corporation. So for employer ID numbers, we have the SS4, and I put some arrows on there. Box 1 is legal name of the entity. In my case, I'm a sole proprietor, and the legal name of the entity is my name. And in box 2, if I had a doing business as, such as Pat's Perfect Tax Practice, something like that, if I had one of those, I don't, but if I had one, that would go in line 2. In the case of a disregarded entity, the legal name is going to be the person who owns the disregarded entity, the limited liability company that has a single member. And the trade name would probably be the name of the LLC, or the doing business as of the LLC. But for the disregarded entities, you want the name and number of the owner, not the name and number of the entity itself. So it also asks if it's an LLC and the number of members. And if it's one member, it's a disregarded entity. If it's more than one member, it's going to be a partnership, unless it elects to be treated as a corporation or an S corporation in a separate filing. That's not done on this. The type of entity, I just pointed out that the sole proprietor is going to put their Social Security number on there. And so if a sole proprietor like me has both an employer ID number and a Social Security number, either number works. So if they give you an employer ID number, you can use that. If they give you a Social Security number, you can use that. If they give you both numbers, I guess you have to make a decision as to which one you want to use because they didn't do it. Now, on the W-9, we've got lines 1 and 2, and again, that name is the legal name of the entity. That's what goes on the tax return that's being filed to report the income. And in my case, that's my name. It goes on my 1040. On line 2 is the doing business as, or the business name, whatever that is, and that may be who you're actually sending the checks to. Now, that first checkbox in part 3 there is individual sole proprietorship or single member LLC. That's a little bit of misleading. Because if the single member is of the LLC is a C corp or an S corp or a partnership or trust estate, then it's going to be the C corp box that's checked or the S corp box that's checked, not that first box for individual or single member LLC. If it's a limited liability company and it's a single member, you do not check the limited liability company box. If it's a multiple member limited liability company, you check the limited liability company box, or they do, and they should also indicate what type of limited liability company they are. Are they a partnership, an S corp, or C corp? And in many cases, if where there isn't an exception, if it's an S corp or a C corp, you don't have to send them a 1099 miscellaneous, but you do for a partnership. And this comes up. We asked for a W-9. They gave us a W-9, but they didn't check any of those boxes. And we had to ask, and they said, yeah, we're a limited liability company. And I said, well, which kind are you? And they never responded, so I treated them as a partnership. At that point, I didn't care, and it didn't matter. I was going to issue 1099 anyway because they're beginning to be too much trouble. And so and they get to sort it out, not me. So if they complain about getting one when they didn't tell you what they were, that's their problem. Okay, box 4 has exemptions, two types of exemptions, exempt payee code or exemption for FATCA reporting. And that's where they can tell you that they're an exempt payee, if they are. So like a friend of mine, or a colleague of mine was a accounts payable supervisor, and he treated everybody they paid out of accounts payable as a vendor or potential vendor. And so he would periodically, you don't have to do this, he would periodically refresh his W-9s by sending everybody a request for a new W-9. And he would send one to the IRS because they paid the IRS out of accounts payable. And the IRS would indicate in that box they were exempt as a federal executive agency, and they send the form back to him. And then he was happy. He had something in their file saying that he'd asked, and they told him that he didn't have to issue them, back up with hold on them, or issue a 1099 to them. For the FATCA reporting requirement, if there is any, they need to indicate that there if they're involved in that. If you happen to know that there's no foreign entities involved in that, foreign financial institutions involved, you can put NA in there, but only if you also put your requester's name and address in that box below it, because you don't want them using that particular W-9 for somebody else where there might be a FATCA reporting requirement. Now, the number, I mentioned that already. A sole proprietor can give you a Social Security number or an employer ID number. Almost everybody else is going to give you an employer ID number. If the sole proprietor gives you both, then you don't have to worry about it too much. You can use either number. Now, the name control. First 4 letters of the last name for individuals. Hyphenated names, first 4 letters of the first last name, and I guess it's first 4 letters of the last name where it's not hyphenated but has a space. And if it's only 3 letters, that's what it is. A sole proprietor be the first 4 letters of the last name of the sole proprietor, despite the fact that the Sunshine Cafe is called the Sunshine Cafe. And so Mark Hemlock's W-9 is going to look like this. Mark Hemlock, Sunshine Cafe, checks the individual sole proprietor. You're going to issue the 1099 to Mark Hemlock. You might be writing checks to the Sunshine Cafe. Other entities have slightly different rules depending on what kind of entity it is and how that's handled, and that's covered pretty much in the handout that I provided for you. The 1586 has some information, and also that one on verification does. The W-9 has a certification section down below. This is where the signature is. It's under penalties of perjury. I certify that. And it has 4 things that they can certify. They aren't necessarily certifying all of them. Now, the first one, the number shown on the return, the form is my correct taxpayer identification number, or I'm waiting for a number to be issued to me. That is the initial solicitation where you ask them for the W-9 and they provide you with a number, if they provide you with a name and number, they do not have to sign the form. You can ask them to for whatever reason, but and they should do it for you then, but it does not have to be signed for that initial solicitation. That number one certification is where you have received a notice and you sent them a B notice, and in response to the first B notice, they can sign the form and tell you what their correct number is. Whether they show you the card or the letter indicating what that number is a different matter, but they sign, and it could be the same number that they gave you originally that the IRS said was a problem, and they just say, that is my correct number, and they sign it. If you get a second notice to send out a second B notice, and you have to keep track of the B notices, the IRS does not, or the CP 2100 and 2100A, you have to keep track of that for each person that you're sending notices to, whether it's a first or second notice. If it's a second notice, they are required to get validation from the IRS as to what the number is and present that to you. The W-9 does not do it after that. The second item is not applicable for most of the purposes we're using it for. This is more related to bank accounts, and they are not subject to backup withholding because they're exempt from backup withholding or have been not been notified by the IRS that they are. And if they are subject to backup withholding, they have to cross that out, and then they have to sign the form if that applies. Line 3, I'm a U.S. citizen or other U.S. person. And this is very often used by foreign partnerships who have U.S. persons as partners. And so the foreign partnership is required to back up withhold on foreign partners, but not on U.S. partners who have provided the number. And this is their backup, that they don't have to back up withhold on that U.S. partner. The U.S. partner says, I'm a U.S. person, and then they don't have to back up withhold on them. Or the fact coding, if any, is correct. So you can see where none of those four would apply, and they don't have to sign the form on that initial solicitation. Okay, obtain a tax ID number from each new payee, even for a one-time transaction, because you may need it later, and if you don't get it, you might have difficulty. Plus that, if you don't have it and you pay them, if you don't have that name and number and you pay them, you are required to withhold the backup withholding. It may be a substitute W-9 or W-8. I've seen them printed on the back of broker statements and purchase orders and things like that, as long as it's got all the correct information. Get it when the pay account is open or first transaction occurs, and again, it doesn't have to be certified unless for certain purposes. If they don't provide you with a number, begin backup withholding immediately. Send out a first annual solicitation by December 31st of the first year. Send out a second annual solicitation by December 31st of the second year. If you still don't get it, if you get CP 2100 or 2100A, send your B notices out within 15 days of that notice. And that gives the recipient time to get with the IRS and find out or the Social Security Administration, figure out what's going on. Before you start backup withholding, you have to start backup withholding within 30 days of that date of the notice. And very often those notices will arrive and the date of issue will be later than the date that you got it. And that's because they want to give you a few days for the mail to get there before the clock starts ticking. If you send a B notice out, that satisfies the annual notice requirement, so you don't have to send out that annual solicitation. You stop backup withholding when you're provided with a tax ID number. Following the solicitation procedure, you have established due diligence, you've satisfied your due diligence requirement, and you have established reasonable cause for avoiding the penalties. That's why it's important. If you don't do that stuff, then you could end up, for any withholding that you failed to withhold or failed to deposit, you could end up having to pay that under failure to withhold rules, paying the taxes for the person that you paid. Verification, you can register to use the taxpayer identification number matching application. It may be used by payers of income subject to backup withholding only. You can do interactive bulk matching. I've got some breadcrumbs in there. I'm going to skip over a few slides here. Publication 2108A is in there, and it gives you all kinds of information information about this process. Individual users register for e-services. This is the same thing the tax pros do to get transcripts, but you won't be able to get transcripts. You'll be doing the verification process. The PIN number belongs to the individual who applied for the PIN number for the secure access. And it's transportable, so they can take that PIN number with them. That does not belong to the business. The primary first user registers the business and then authorizes access for the business by the other users that have their PIN numbers. And you can authorize your accountant or tax advisor if they have a PIN to do that, and you revoke the access if they no longer need it. You can ask the payee for correct name, TIN, where it doesn't match. If you don't get it, this is not notice from the IRS to begin backup withholding. There are a lot of false positives and false negatives in the system, particularly because of the 4-character name control. If you don't get it, go ahead and do your notices, because that establishes due diligence. It's not notice, but you might as well have all your ducks lined up before something happens. Backup withholding is at a 24% rate. This is not a regular tax rate. It's 24%. Used to be 28, now 24%. It applies to rents, royalties, independent contractors for services where payee did not provide a taxpayer identification number, or the IRS has notified the payer that the taxpayer ID number provided was incorrect. Failure to furnish a TIN, withhold payments until it's furnished. If you get the notice that it's incorrect or missing, send your B notices to the payee within 15 days. There are letters in the handouts that I provided to you, sample letters. You must begin withholding within 30 days of receipt of the notice. You may begin earlier. Stop within 30 days of receiving a certified W-9. It has to be signed in that case. And validation of the Social Security number is required for the second B notice. You report the withholding on Form 945. That's an annual return of withheld federal income tax due by January 31st, or if you've made all your deposits February 10th of the year following the year that you withheld it. Report the withheld tax on Box 4, Form 1099 miscellaneous, and there's a backup withholding publication 1281. That's also in the handout. You can refund anything withheld in error, must be due to payer error, and withholding received prior to a timely W-9 is not payer error. And if deposited and it was an error, you can apply for credit or refund using Form 945X. I've got a picture of the 945 here. Just wanted to point out a couple of things. Backup withholding goes on line 2, everything else on line 1. You do have to report your liability if you're a monthly scheduled depositor or a semi-weekly depositor. You report when the liability arose on Schedule A, it's when you paid the vendor and withheld the tax, or should have withheld the tax. And the IRS determines when it should have been deposited and determines any penalties. This is a picture of the A. It's got the dates for each month, and what day you paid would be the date of the liability. And so there's some stuff on hints on penalties, what they can arise out of just about anything that causes it not to be handled. There are 2 separate penalties, one for late filing, one for late furnishing, so you can get slapped with 2 penalties for a particular form if there were problems with both of them. The penalties are, you get discounts for early fixing of them, the per form penalties, and the maximum penalties are both indexed. The per form penalties are rounded down to the nearest $50 after indexing. The maximum penalties are rounded down to the nearest 500 after, and you can see that the intentional disregard one has been going up just about every year, and the after August 1st one has gone up a couple of times since it was started in 2016. The within 30-day penalty has not increased because it hasn't exceeded $60 yet with the indexing. Reasonable cause is your best defense. It's not willful neglect. You must be able to show you acted in a reasonable manner both before and after the failure occurred. Significant mitigating factors would include a history of filing correct information returns, and the failure due to events beyond the payer's control would include such things as pay did not provide the correct TIN in response to the request, and you took your steps to avoid the failure. Other exceptions are inconsequential error or omission. This is one that does not hinder processing or keep the payee from filing a correct return. And de minimis error for corrections, this is based on the number of errors. This is different from the other one. It's fewer, the greater of 10 or one half of 1% of forms filed, provided they were filed timely and they simply contained incomplete or incorrect information, and you made the corrections before August 1st. So some tips on avoiding errors and paper forms and stuff like that. And I apologize for going over. I apologize for the late start, but we will now address any questions that you might have at this point. And I will stay a little longer if we have a lot of questions. Also, if I don't get to your question or don't answer it adequately, or you think of something later, feel free to send an email to Compliance IQ, and they will forward that to me, and we'll get an answer back to you. And with that, I'd like to, my final words for this, before answering the questions, is that I'd like to thank you all for attending and hope it was helpful for you. I'd like to thank Kier for hosting this, and to our Compliance IQ for producing it. And with that, I'd like to wish you all a great rest of the day and the rest of the week. And now we'll turn it back over to Kier for questions and his final words.